Good morning, investors. You are now on KleverStock with me, Anujaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Investor sentiment on Bursa Malaysia remained upbeat this morning, with buying interest continuing to center on blue chip counters amid easing tensions between the United States and China. At the opening bell, the FPM KLCI slipped 1.2 points to 1,621.22, but quickly rebounded to an early morning high of 1,625.97, reflecting renewed optimism in the market. Rakuten Trade said the continued surge in interest on the local bourse could be attributed to active buying by local institutional investors, although there are indicators that foreign funds may have also turned net buyers. Rakuten Trade said in a note, in view of this, we hope that foreign funds will stay a tad longer, thus anticipating the index to trend between the 1,620 and 1,630 range today. Meanwhile, TE Securities noted that blue chip stocks are likely to extend their gains, buoyed by optimism over their easing US-China trade tensions. However, it added that stronger buying momentum and liquidity will be crucial to sustain the upward trend. On the blue chip index, Petronas Dagangan rose 16 cents to 22 ringgit and 68 cents. RSB Bank added 7 cents to 6 ringgit and 91 cents, and Genting Berhad gained 6 cents to 3 ringgit and 46 cents after news that its offer for Genting Malaysia's shares had turned unconditional, having crossed the 50% equity threshold. Among the most active counters, MMAG Holdings fell 1 cent to 17.5 cents after a sharp 60% plunge in the previous session, which prompted an unusual market activity query from Bursa Malaysia. Borneo Oil edged up half a cent to 1 cent, while NextG slipped 1.5 cent to 33.5 cents. Moving on to local currency updates. The ringgit opened higher against US dollar and maintained its strength throughout the morning session as continued uncertainty over US monetary policy weighed on the greenback. At 8 a.m., the local note stood at 4.1900 or 4.9265 against US dollar, improving from Malaysia's close of 4.1980 or 4.2025. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Nizam Abdul Rashid said the US dollar ringgit pair is likely to remain in a narrow trading range, hovering around the 4 ringgit and 20 cents level for the day. He noted that US Federal Reserve Governor Lisa Cook recently acknowledged that the US labor market is showing signs of weakness, though she refrained from offering guidance on the Fed's potential rate decision in December. Meanwhile, Fed Governor Stephen Miran, who had voted in favor of a 50 basis point rate cut, described the current monetary policy stance as restrictive. Muhammad Nizam told the US dollar index DXY stayed elevated, rising 0.07% to 99.871 points in response to the remarks. On the broader US economy, he pointed out that the ISM manufacturing index fell to 48.7 points in October, marking the 8th straight month below the 50-point threshold that separates expansion from contraction. He said based on the ISM survey, most businesses have expressed pessimism, with tariffs pushing prices higher and causing supply chain disruptions as firms face limited options to source inputs domestically. At the opening, the ringgit traded higher across major currencies. It strengthened against yen to 2.7157 to 2.7265, gained against the British pound to 5.5506 or 5.223, and most European and rose versus the euro to 4.8244 or 4.8434. The local currency also advanced against most ASEAN currencies. It improved against the dollar, Singapore dollar, to 3.2095 or 3.2224, firmed against the Philippine peso to 7.12 or 7.16, and strengthened against Thai baht to 12.8852 or 12.9431. It was, however, little changed against the Indonesian rupiah at 251.2 or 252.3. Continuing with economic updates. An increasing number of Malaysians purchasing second-half homes are facing renovation and repair costs that far exceeded their initial budgets, as rising labor and material expenses drive up total project costs. Industry experts say this trend is compounding the affordability challenges already facing Malaysian home buyers with slow wage growth and high property prices, leaving little financial room for unexpected post-purchase expenses. For new homeowner Izzati Mustafa, the reality of escalating renovation costs was a shock. After purchasing a landed home for 80,000 ringgit, she expected to spend around 35,000 ringgit on renovations, but the total ballooned to 60,000 ringgit once electrical rewiring and structural fixes were factored in. She said, we kept having to add more because the wiring had to be completely redone, adding that even after the extensive refurbishment of the living room, 3 bedrooms, kitchen and bathroom, new cracks appeared in the ceiling just months after moving in. Retail worker Aina Yunus experienced similar challenges while renovating her 500,000 ringgit home in Sarjana Utama. She spent around 20,000 ringgit in phases, exceeding her budget due to plumbing repairs and small structural issues. She said the plumbing alone cost about 3,000 for 1 bedroom and we had to redo the entire flooring. In urban centers, the financial strain is even more apparent. K. Bella, who purchased a double-story house in Petaling Jaya for 1.1 million ringgit, was quoted not less than 300,000 ringgit by 5 different contractors to make the home move-in ready. Juwaya IQI co-founder and group CEO Kashif Ansari said the key cost drivers in renovations are labor and materials, both of which have seen steep increases in recent years. He said cosmetic upgrades such as paint, lighting and basic flooring cost about 30 ringgit per square foot on average, but major structural works or extensions can range between 150 ringgit and 300 ringgit per square foot. Rising wages for skilled workers, services, taxes, and mandatory upgrades like waterproofing and rewiring are also contributing to the surge in cost, making sub-sale homes less affordable despite their lower purchase prices. University Technology Malaysia Associate Professor of Property Economics and Finance Dr. Muhammad Najib Razali said Malaysia's laws offer limited protection for buyers of second-hand homes, as the Housing Development Control and Licensing Act 1966 applies only to new properties from licensed developers. Najib proposed introducing mandatory pre-sale home implications by certified professionals similar to system in Australia and Singapore to ensure buyers have full visibility of a property's condition before purchase. He also suggested amending their values, appraisers, estate agents and Property Managers Act 1981 to require transparent property condition disclosures and implementing a standardized property condition report under the Board of Valuers, Appraisers, Estate Agents and Property Managers of the National Property Information Centre. Najib added that the renovation costs for sub-sale homes can add between 20 and 40% of the total cost of ownership. A buyer, inshallah, who purchases a 25-year-old terrace house for 500 ringgit may have to spend 120,000 ringgit more to repair wire, roofing and flooring issues, costs not covered by statutory warranty. Unlike new developments, which come with a defect liability period of up to 24 months, subsale properties lack such safeguards. And now moving on to corporate news update. Petroleum Nasional Berhad, also known as Petronas, and Italy's Eni are set to invest more than 72.2 billion ringgit in Indonesia and Malaysia over the next 5 years through a newly established joint venture company, NewCo, that will combine both firms' upstream oil and gas assets in the two countries. The two energy giants signed an agreement in Abu Dhabi to form the company, which will be held under equal ownership and operate as a financially self-sufficient entity. The partnership is expected to accelerate exploration and production growth in Southeast Asia, building on both companies' deep technical expertise and regional presence. According to Eni, NewCo will channel the investment toward the development of at least 8 new projects and the drilling of 15 exploration wells across Malaysia and Indonesia. Together, these efforts are expected to help develop approximately 3 billion barrels of oil equivalent of discovered reserves. In addition, the joint venture will seek to unlock about 10 billion barrels of unrisked exploration potential, significantly expanding the energy base for both nations. NewCo will start with an initial production base exceeding 300,000 barrels of oil equivalent per day and aims to grow output to more than 500,000 barrels in the medium term. Eni Chief Executive Officer Claudio Descalzi said the collaboration with Petronas marks a major milestone in enhancing upstream capabilities across the region. He said by leveraging existing production assets and developing material initiatives in both the Kutai Basin in Malaysia, we expect to deliver over 500,000 barrels of oil equivalent per day in the midterm. He added this opportunity will deliver impressive value creating for Eni, Petronas Indonesia and Malaysia. Enabled by our integration of assets, from both companies will allow NewCo to capitalize on synergies in production, efficiency, cost optimization and technological innovation. The joint venture is also expected to strengthen regional energy security and contribute to both countries' sustainable development goals, such as cleaner and more efficient resource management. Following the signing ceremony, both Eni and Petronas will produce a source to secure all necessary regulatory, governmental and partner approvals in Indonesia and Malaysia. The companies expect the transition to reach financial closing in 2026 upon completion of all customary and statutory process. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Masing Group Berhad is expanding its presence in Semenyi, Selangor with the acquisition of 275-acre freehold project adjacent to its existing 500-acre Legacy townships for 273.5 million ringgit. Genting Berhad's bid to take Genting Malaysia Berhad Private has become unconditional after crossing the 50% shareholding threshold. The group said it now owns 50.1% of GNM's total issued shares. And next, AWC Berhad has proposed a bonus issue of warrants on the basis of one free warrant for every 4 existing shares held in the building facilities management company. The exercise involves the issuance of up to 84.8 million warrants with a tenure of 5 years. Zentech International Berhad said discussion to acquire a 30% stake in Sharia-compliant payment gateway providers Soka Fintech Berhad have been terminated, as the negotiations did not lead to mutually acceptable terms for a definitive agreement. Last but not least, DXN Berhad has partnered with layer farming enterprise Selassie Ahmad Sdn Berhad to launch the DXN Lingti egg and functional food product that combines Ganoderma Lingti with poultry farming. Now that's a wrap for Moneyball updates with me, Anujarya, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.